Hey, what's up, dreamers? I'm Zeke, and welcome back to the Dream Green Show. In this episode, I'm going to be bringing you guys the top 5 growth dividend stocks that's near that 52-week low that you need to be paying attention to if you're really trying to grow your dividend account and live and retire off of your dividends in the future. Not going to waste your time. We're going to dive straight into it. So go ahead, hit that thumbs up button and subscribe to the channel. Guys, that really helps me out more than you guys can possibly even imagine. The first one on this list is PepsiCo, ticker symbol PEP. Now, PepsiCo has been growing. They're my favorite on this list because they're dividend kings. Now, Dividend King is a company that increases their dividends every single year for the last 50 years. You got dividend aristocrats, S&P 500 increase their dividends every single year for 25 years. You got dividend kings inside the S&P 500 increase their dividends every single year for the last 50 years. PepsiCo has been increasing their dividends every single year for the last 52 years and have a pretty sweet dividend yield. Now, guys, if we do take a look at PepsiCo earnings, PepsiCo over the last year, they did have a high of around $183 ish, and it's been pulling back near that 52-week low. Actually is at the 52-week low, being down at $142 per share. So yes, PepsiCo has been on the decline, but guys, I have a pretty sweet dividend yield, and we could be getting them at a discount. Now we come over to PepsiCo websites. Not only do they just make Pepsi, everybody think they just make Pepsi. No, they own all of this. Aquafina, Bear, Brisk, Doritos, all the Cheetos, Captain Crunch, Fritos, Gatorade. Yes, they own Gatorade. They own all of these companies on this list, including PepsiCo, including Pepsi, Roll Gold, Smart Food, Popcorn, Starbucks, Ready to Drink, energy drinks. They own all of this, right? So they're not just making Pepsi cans, but Pepsi has been an amazing company. In fact, that's just over the last year. If we look over the last 5 years, guys, you can see that they have been on a steady incline, and they're just having a recent pullback to where we could get them at a pretty decent price. Back in 2023, they did reach all the way up to $196. So if we continue to buy shares of them and grow our dividend account, we could make a lot of money. Here we are over on Seeking Alpha. This is PepsiCo. They've been increasing their dividends every single year for the last 52 years, and they have a dividend yield of 3.6%. And they are a quarterly paying dividend stock. That means you have monthly paying dividend stocks that pay out the dividends every single month, and then you have quarterly paying dividend stocks, so they pay out 4 times a year or every 3 months. Now, guys, if you do want to know every single time I'm buying and selling a stock, I'm gonna leave a link down in the description in the pinned comment section to my Patreon. Patreon will take you over to my Discord. Right now, I have 5. That's right, 5 different pro day traders in there that I pay a lot of money to, and right now you can get them for just $10 a month, and we post our option trades in there every single day. And if you want to have access to them, you can join the Lucid Dreamer role. In there, I also post my technical analysis. I post every single time I buy and sell a stock, and I also post my option trades in there, like my leap trades. And if you want to be a part of a community of investors that want to be financially free just like you, I know you want to be financially free because you're watching this video, you could go ahead and join the Lucid Dreamer role inside of the Patreon. If you want to join the Dream Team and be a part of my Zoom calls every single Sunday, you can join the Dream Team and learn the wheel strategy. The wheel strategy has been generating me so much passive income every single week. If you want to learn that, guys, please consider checking out the Patreon. Now, if we do come over to Moomoo and we type in PepsiCo PEP, let's look at what the analysts are saying. We'll click right here. It's giving it at the 12-month target a high of $185 per share on PepsiCo, a median price of $166, and a low price of $150. So it is below the low price that the analysts are projecting out. Right now, they have a 56% buy that you need to be buying PepsiCo right now, and 43% are saying if you already own it, just hold on to it, and 0% are saying sell PepsiCo. So that's the first one on this list. The next one on this list is going to be Nike. Now, I don't have to explain what Nike do, but over the last 23 years, Nike has been growing their dividends as well. If we come over here, Nike, I don't have to explain what Nike is. If I do, you guys don't need to be living under a rock. But Nike has been underwhelming some of their investors with their unclear future or what they're going to be doing with Nike. But due with some of their sluggish sales, the sales have been slowing down. That's why the share price have been pulling back. But Nike is one of those household names that's not going anywhere anytime soon, especially inside the long run. but I do think that Nike is going to recover in the near future. If we come over to Nike dividends right here and scroll down, you guys can see they've been increasing their dividends for the last 23 years, and they have a 2.2% dividend yield. Now we pull up Nike over the last year, you guys can see that they was all the way up to $100 at one point, and now they're down at $70. Now let me ask you something. If you've seen a pair of Nikes for $100, or a shirt or a pair of shorts of Nikes for $100, and then you come back in the following week and you see Nike, that same pair of shoes at $70, would you buy them? Those same pair of shoes that you want? Yes, you will probably buy Nike while it's on sale, right? Nothing about that shoe changed at all. It's just that it's at a cheaper price right now. It's the same shoe. Are you gonna look at the shoe differently because it's at a cheaper price? No, you're gonna buy that shoe. So that's the same thing with Nike. It's at $71 right now at the time of the recording of this video. Now, if we want to take a look at the analyst ratings, let's type in Nike NKE and take a look at company. Now they're giving it a future target of $120 over the next 12 months, median price of $94, and then a low price of $73 for Nike. Now the next one we want to look at is Pfizer, ticker symbol PFE. Pfizer Pharmaceuticals is a giant, and it offers a usual high dividend yield, probably the highest on this list at 6.6%. Now that's because it had a pretty steep price decline, but we could be getting Pfizer at a pretty good price. Now Pfizer has been increasing its dividends for over a decade, and even increased their dividend payouts to around 43 cents per share this year alone. Pfizer started to drop, as you know, I don't even want to say that word on YouTube, but as COVID started to, those sales started to normalize or decrease, resulting in the price drop in the high payout ratio compared to the dividends to price ratio, right? Pfizer, that's not the only thing they do. They're going to continue to make new vaccines and other different drugs that they can supply out to humanity, and they're going to continue to make the pharmaceutical drugs for a very long time. So if we come over to Pfizer over on Seeking Alpha, ticker symbol PFE, let's look at Pfizer. They increased their dividends every single year for the last 14 years, and they have a 6.69 dividend yield. And they are also a quarterly paying dividend stock at 43 cents per share. And Pfizer is at $25.72 at the recording of this video. Now we come over here to the analyst ratings on Pfizer. Right now it's at $25.72. It's giving it a high of $36, a median price of $30, and a low price of $28. Now 41% is saying to buy Pfizer right now, and 58% is saying that hold on. If you just got it, just hold on to it. You don't need to add more to your position. Let's see where it goes from here. But yeah, that's Pfizer right there. The next one that we're going to take a look at is ticker symbol MRK. Now this stock just had a recent pullback towards the 52-week low, elevating its dividend yield to around 3.7% dividend yield. That's more than twice of the other companies inside of the healthcare sector. Now MRK has been increasing their dividends for around the last 14 years with a moderate payout ratio of under 50%. Now their strong profits come from one of their cancer drugs, Keytruda. It climbed around 18% to $29.5 billion in 2024. So that helped their revenue grow around 7% last year. But due to the temporary pause in HPV vaccines shipments to China, it put a cloud over the outlook for 2025. So that brought the price back on MRK. Let's take a quick look at how's MRK performing. Type in that ticker symbol. Here it goes. Their dividends, they've been increasing it for 14 years. They pay out their dividends every single quarter, and they have a 3.43 dividend yield, paying out 81 cents per share. And they have, right now they're at $94.57 per share. Now when we come over to MRK, you guys can see that once that news came out, they just been on the decline. They was up to $131, and they fell at one point in time all the way down to around $85 at the recording of this video. But over the last 5 years, you guys can see that they was on a very steep incline right there. And then the news came out, and then they just been pulling back. Could this be a good buying opportunity on a company that's been increasing their dividends every single year for the last 14 years? Yes, it could be a good buying opportunity. Now we look at the analyst ratings. They're giving it a high of $138, a median price of $111.76, and a low price of $95. So that's going to move us over to the last one on our list, and that is going to be Texas Instruments, TXN. Now, Texas Instruments is a high quality tech company that has increased its dividends every single year for the last 21 consecutive years. Now, after the recent downturn in the semiconductor market, Texas shares are trading near its 52-week low. Now, one thing about the dividends is that the recent earnings dip pushed the dividend payout ratio to around 100%, but the dividends remain secure given that the firm's strong free cash flow and financial health makes it a little less risk of getting their dividends cut the following year. Now, Texas Instruments, TXN, is supposed to rebound. The company is expected to return to this revenue and earnings growth in 2025. So we come over here and we're going to type in TXN. You guys can see that they've been increasing their dividends every single year for the last 19 years. They pay out every single quarter, and they have a dividend yield of 3.8%, paying out $1.36 per share. And right now they're $176.42. So here we are on TXN. You guys can see that they did pull up to around $220. They started off the year at $169 in 2024, and it's starting to pull back near its 52-week low. If we look over the last 5 years, you guys can see that over the last 5 years they're up 67%, which is really, really good. At one point in time they was up 90-something%, which is crazy, right? So if we take a look at their outlook, let's see what the analysts are saying. Let's look at the company. Let's see right there. You guys can see that they're giving it a high of $284 per share, a medium price of $214 per share, and then a low of $140 per share. So this was one of the first ones where the low price was way lower than the current price that it is right now. So you could probably be a little bit more patient on TXN if you guys want to wait until it pulls back down to that low price to enter in on a couple of these stocks. But that's it, guys. Let me know which one is your favorite of these 5 down in the comment section. Go ahead and comment down below there. That helps out the YouTube algorithm. What do you guys can possibly even believe? You know what helps out even more? Hitting that thumbs up button is completely free. And if you guys do want to pick up some free stocks, I'm gonna leave a link to Moo down in the description. You sign up with Moo, you can get up to 30 free stocks and use all the tools that I use inside this video completely free. I got started with 5 free stocks. You guys can get started with 30 free stocks, and with your uninvested cash in there, you can get up to 8.1 cash week interest on your uninvested cash. But that's it, dreamers. Let me know which one of these 5 is your favorite dividend growth stock down in the comment section. I'll probably do a deeper dive on whichever one get the most comments down below. But other than that, guys, I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.